Hi everyone, it's Marissa and Priya here from Rise High, and today we're talking all about refinancing. So obviously this is a question that we get a huge amount of times, especially at the moment with interest rates on their way up. A lot of people that are in fixed rates that are about to come off their expiry, and they know that when their fixed rates do come off expiry, their interest rates are going to be much higher. So the number one question that we're getting at the moment, Priya, is should we refinance?
Yeah, absolutely.
So today we're going to focus on refinance. I've got Priya, who is one of our senior award-winning mortgage brokers at Rise High, and she's here to answer all of our questions today. We are filming this live, so any comments or questions you have, please send them in the comments below, and we'd love to answer them live for you today. What we're going to be covering today is why refinance. So let's talk about the pros and cons and what are some of the reasons around refinancing. We also want to look at when we're going to refinance. So when should you consider refinancing? We're going to talk about what the refinance process is and some important considerations that you need to look for, and how to make sure that you've got the right team in place to get the right refinance results that you need to. So that's what we're going to go through today.
Yes. Yep.
And I will get started right now, I think. So, Priya,
Yes.
welcome.
Marissa,
Thanks
you.
for joining
Thanks for
us.
having me. Yes.
So let's start with why refinance. What are some of the reasons that people should consider refinancing?
So obviously the hot topic is refinancing, with people, coming off fixed rates very soon and interest rates still going up. The reasons why people should consider this is one, if they can save interest costs in the long run, they should definitely sort of look at what options are available. They should also consider if they're coming off a fixed rate, which is going to be quite low considering they would have fixed a couple of years ago. So, their payments will almost double, and they've also probably got a budget in advance as well. The other reasons for refinancing is people might want to see what they can do, whether they want to change the structure of their loan, borrow more equity to buy another property, and simply just an equity release as well can sort of trigger you to have to do a refinance.
Yeah, so I guess, there's the cost, the cost savings potentially, there's changing the structure. That can also apply in the case that someone's borrowing capacity is capped or maxed out at a particular bank.
Yes, absolutely.
Are you finding that's the case at the moment?
Yeah, so if there is, other lenders that are a bit more lenient with their policies, perhaps certain niches that they have, or, if the borrowing capacities are better, then, there is definitely an opportunity to look at refinancing and restructuring your loan with that, with the new lender as well. Yeah, absolutely.
Yeah, and I guess, another thing that we're finding with interest rates going up is that people's borrowing capacities are getting lower,
yes.
which means that making sure that you've got the right lender that you're working with is super important.
Yeah, absolutely.
Another reason that we're finding people wanting to refinance at the moment is obviously the cashbacks.
Yes.
So is that a bit of a driver for refinance right now?
It is a bit of a driver. It shouldn't be the most important thing to drive your refinance reasons, but yes, it is playing a big role, which I think we'll discuss more in detail, along with the reasons as to why and what you should consider when you're refinancing.
Because the cashback gives you kind of that initial sugar
boost,
hit,
yes.
But what is the real long-term cost of
Absolutely.
that? And that's the thing that you need to take into consideration.
Yes, absolutely. And then I will elaborate a bit more on that as well, because so sort of you can sort of refinance for cashback reasons purely, but you do have to look at the costs as well.
That's right.
Of
exactly.
refinancing and the long-term benefits of the interest rate as well.
Yeah, I think one of the biggest reasons to refinance, as you mentioned it at the beginning, is to save money.
Yes, absolutely.
To reduce your interest expense, to pay off your mortgage sooner. How do people go about deciding whether there's sufficient savings for them to consider a refinance?
So a few different things come into play again. Like, we do the mathematics behind it, so definitely talk to one of us, because we can make sure that we add all the aspects of it. Because friends or family might say we're on this rate. So why don't you switch across? So each situation for each individual is different. So you definitely have to, do the calculations, find out whether it's just the rate that's going to save you the money. What about the exit fees, and what about the
That's
new
right. You've got to
application
take everything
costs.
into consideration:
Absolutely,
the
yeah.
fees, the rates, also how long you're going to have the loan for, what the
Absolutely.
loan purpose is, what the next step is. So there's so much to consider.
Correct. Yeah, absolutely.
And that's where you sort of sit down with your client and go through it all. What
Yeah.
would be the process that you'd go through with your client to sort of cover off on those savings?
So I go through a pretty elaborate sort of, calculation process, budgeting with them, looking at sort of where they're sitting with their current lender, what are the options, whether it's better for them to stay on variable or fixed. Of course, that decision does come down to each individual person as well. But we do all the calculations and sort of help clients understand what their sort of 1 year or 2 year position would be, so that they know that they're making a sort of a very executed sort of calculated decision. Again, I work out sort of what your repayments are going to be. If you stayed on the variable rate, would they increase to X amount? If you went on a fixed rate, what were the benefits? So it's a pretty thorough process that we go through, so you understand every single cost. Like, this can be something as simple as a annual package fee that you might have to pay, or a application fee. You have land titles, office fees. So
it's
a
important
lot of
to take
little
into
things.
account everything up
Absolutely,
front.
everything.
Yeah, because like you just said, it's not actually just the bank fees. There's also other fees associated. So it's
absolutely.
important that you take it all into consideration.
Cool. Yeah.
And when should people consider refinancing?
So when you do look at refinancing, is one, if you've been with a lender for a couple of years, perhaps on a rate, and you're not able to get better retention with the same lender, that's one of the key reasons you might start looking. And secondly, say you want to sort of move across from a current rate that you're on and your lender's not able to offer you better fixed rates, for example, and you want to go on a fixed rate, that's something that might trigger you to do so. And again, like Marissa said, with the borrowing capacity, that could also, if you did want an equity release to renovate your place or a top up, then you might want to go to a different lender where you could borrow a bit extra money as well while you do so.
Yeah, I mean, at Rise High, we do have a program for our clients where we review their loan every 12 months.
Yes.
And I think it's really important for everyone listening today to make sure you are reviewing your mortgage every 12 months. If your mortgage broker's not doing that for you. Mm-hmm. So that's super important. That doesn't mean you refinance every 12 months, because of course there are some downsides of refinancing, which we'll get to in a moment. But it just means that you're reviewing your mortgage. You're going, when we do a review for our clients, we're going back to the bank. We're trying to see if we can get them extra discount. We're seeing what extra equity they've got in their property to try and save them money with their existing loan. So as Priya said, see what your existing lender can do for you, but at the end of the day, you should be looking at refinance options. And refinance options doesn't necessarily mean that you have to move to another lender. Like you said, sometimes it could be a different structure with the same lender or a different product type with the same lender.
Yeah, absolutely.
So refinance can also mean an internal refinance, which is a refinance with the same lender. But getting the right advice around that is so important, isn't it, Priya?
I agree, yeah, because there's so many little aspects involved which clients may not be aware of. So it's very important to sit down and discuss with us. Plus, like Marissa said, there are sort of negatives to refinancing too often or too many times as well, because it does impact your credit file. So it is really important to consider all aspects before just sort of refinancing for just a rate or a rebate, for example. So
can we explore that a bit further, because I think that's really important for people to understand, because there are implications of refinancing too regularly.
Yes.
So one of the implications is the credit file and your credit score. So can you just explain what that is and how it impacts people down the track?
So, I mean, if you've recently, say, purchased a property within the last 12 months, for example, and you're looking to refinance sort of within a 12-month period, that's going to keep getting listed on your credit file. And lenders sort of, when each time they look at your file, they will look at how many credit inquiries you've had on these files. So, I mean, on top of the home lending, if you've had telecommunications and say credit card inquiries or personal loans, so all of that adds up, and you start getting what we call negative score, like negative ratings on your credit file, and it can get to a point where they will look at your file as not sort of a very good credit file to lend to.
Yeah, you could have a really bad credit score.
Exactly.
What's probably important to mention is that with many of the lenders these days in Australia, the application goes through a credit scoring system on a computer before it actually goes to a human.
Yes.
And in some instances, if your credit score has been damaged to such an extent, then the computer can decline it. And this can actually happen for applicants that are really good at meeting all their repayments. It doesn't necessarily mean that you've had any defaults or any bad repayments, but if you've been shopping around and getting lots of credit inquiries accumulating on your report, then that does impact your credit score.
So yeah, that's very important. Like Marissa did mention, like you do got to make sure whoever you're calling for, especially with credit cards or personal loans, just make sure that it doesn't go onto your credit score just from you calling them, which happens quite often. And I find clients do come to us with several inquiries, even though they haven't proceeded with the actual facility. The companies that you go to still list them on your credit file, which then diminishes your credit score.
The other consideration that we need to talk about is the hidden costs.
Yes.
So let's talk about those. What sort of hidden costs are there? Because obviously the lender will tell you what the sort of upfront and ongoing costs are, but it's not just the lender's costs that you need to take into consideration. What sort of costs do people need to consider when they're looking at a refinance?
So there's many different things. First thing that you would consider is to exit a bank. You would be paying your discharge fee from the bank, which again doesn't always get clearly listed everywhere. And then you do have your land titles office fees to exit as well. So that's
a government tax fee.
Tax fee. And each time you leave a lender and join a new lender, that gets double
registration of mortgage fee
and a
again,
discharge. So that's another, could cost up to about $350. So you're probably looking at close to about $700 or $800 to refinance out. And secondly, you have to consider if there are your new lending application fees, if there's any lender settlement fees. These could all be like sort of segregated into little amounts that don't get displayed to you in one full figure, basically. Yeah.
So it's important that all of those fees have been taken into consideration. And that's obviously something that you take into consideration when you're scheduling it out for your clients. With other implications or things to consider, what are some of the other things that people need to consider when they're considering a refinance?
So you've also got to think about where you're moving your loans to, whether if you wanted to buy more properties in the future, is that lender going to be more suitable for you in the short term or long term? Secondly, we like Marissa said, we review our clients every 12 months. So if there is a lender that you're with or going to that's not very good with retaining you and just giving you a great rate to enter, but they're not taking the effort to keep you there, that's also to be considered. Secondly, like we talk about sort of service levels and how are they with responding to your application. So lots of different things to consider before we just simply switch across to a lender.
And I really love that point that you just said about short-term versus long-term.
Yeah.
I do feel that sometimes a lot of people just get sucked in or lured in with the short-term, incentives that come with a particular product or a particular lender. But it actually maybe that product and lender doesn't suit their best interest in the long term. So I think it's super important to make sure that the lender that you're working with, the mortgage broker that you're working with, really understands your long-term goals and objectives, and making sure that wherever you're going, even if you don't intend to be with that lender for the longer term, you need to make sure that you're not setting yourself in a position where you could become a mortgage prisoner and stuck to that particular lender when they're not necessarily going to be the best lender for you moving forward. Shout out to Teresa, Amanda, Adri, Patrick, Susan, Sharon. Thanks for joining us today, guys. If you've got any questions or any comments, please post them below. So we've talked about some of the reasons why we would refinance. We've talked about when we would consider a refinance. We've talked about some of the implications of refinance. Can you just walk us through the refinance process? What does it involve?
Yeah, absolutely. So I think the first thing that we need to do is have a look at where, because when you are moving to another bank, you're still looking at your borrowing capacity and you're looking at the valuations of your property. So there's a few different aspects here. So it's pretty much as though you're going to a lender to get a new loan. So everything that you did with your original home loan is what you'd be considering here. So all the paperwork would be similar. So yes, a few things are borrowing capacity. Have you got equity in your property? Is your value high enough for you to move without actually incurring lender's mortgage insurance? And also, again, we do look at the calculations of interest rates, what your repayments are going to be, affordability of repayments, and then we also consider like the structure, whether you want like a fixed loan or a split loan. So all of these go into the back end of it. But the first process would be that we check the valuation of a property, and we also do the borrowing capacity to see whether it's actually feasible for you to move, and is it going to save you money on your repayments that you're currently paying as well.
Yeah.
So that's the first step. And then of course after that's all clarified, we do sort of also do a lender comparison at the same time to make sure you've got several options that you're choosing from, and we also just give you options of fixed versus variable as well. So all that's done, then you're pretty much ready to sort of start an application process.
So you sort out the valuation for the client of the property, work out their borrowing capacity, look at the options, compare the options, and then find a way to move forward. And how much does Rise High charge clients for this service?
Well, our service is free of cost to you, and our
It's
advice
free.
is free of cost too.
Free of charge,
And that does sort of make our clients sort of come back to us and are sort of loyal, and they understand that the advice we're giving them is coming from a very sort of unbiased place, and it's for our customers to benefit from all these savings rather than anything else.
So it's an awesome service.
Yeah.
I know that you and the rest of the team just work so hard to find the best solutions for the client, so that's wonderful. So then that brings me to the next point. How important is it to have the right team behind you, and who do you need in your corner to make sure that whatever you do from a finance perspective, particularly refinance, and making these important decisions on pretty much the most expensive ongoing expense that most families have in Australia, who are the people that you should reach out to?
Obviously, your first port of call, like if you've already got your mortgage broker, would be to contact us, because we've got all the tools to work out what's going to be best for you. And secondly, we're here to make sure that you're moving for the right reason, and that you're not just being told information, because we all hear bits and pieces. We see things on social media now, so it's a lot of information for us to take. So we're here to kind of say, okay, right, this is what you're going to benefit out of it, and if it's not beneficial for you, we won't unnecessarily just move you in and out of a bank just for our benefit. So it is very much tailored to you guys, and that we're here more for saving you costs.
We work for the client rather than the bank.
Absolutely, yeah. So we'll make sure that we follow the right processes. Everything is done, that you have a good understanding of it. It's all documented. We send you everything in writing, and you can have time to read through everything before you make a right decision for your family and your savings, really. Yeah.
So if it's been a little while since you reviewed your loan, please come and talk to us at Rise High Financial Solutions. Like Priya said, our service is fee-free. If you've got a fixed rate that's coming up for expiry at any time in the next 12 months, then let's have a chat early to establish a plan. Basically, we can review your loan anytime you want, but it's really important that it is done regularly, and we're here to help. We will put your best interests first every time.
Yeah, absolutely. I would definitely agree with Marissa. Just get in touch, because it's never too soon or too late. Just it's any time is the right time for you to call us and get the information and work out what's best for you. The other thing is, if you're not prepared right now, we can sit down and talk about budgeting when you come off the fixed rate, so that we've got a plan in place when you come off your fixed rate, because it's a very scary place to be when your repayments could almost double when you come off the fixed rate. So definitely contact us sooner rather than later, because it gives you enough time to prepare yourselves, basically.
Thanks for tuning in today. We'll see you again next time. Have a great day. Bye.